Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and I'm here to dive into the August 2023 Toronto real estate market update. Okay, so before we dive in, as we know, the summer stats we have to take with a little bit of a grain of salt. Typically people are on holidays, real estate's not top of mind for a lot of buyers, so the numbers do become a little bit skewed when we're looking at through the year. But what we'd like to look at is, what's happening month over month, but also what's happening vis-a-vis last August. I would say, certainly we've progressed as a market from where we were last August, but there's a lot of similarities. So let's dive into the numbers and see where we are this month. Okay, so sales volume, unsurprisingly, we are down. We talked about a inventory issue where we've had that basically through this early part of this year, but we sort of see inventory rise. And so, when you have a similar set of buyers, but inventory rise, typically that's an early indication that prices are going to start to decline slightly. So, so we're starting to see that a little bit. Inventory is rising month over month, ever so slightly. But again, it's summer. I don't want to read too much into this. Really, where I think is going to be the most telling is what's happening in September and October. Like, really, those are really going to set the stage, I think, certainly for the fall market, but really into early 2024. So, but anyway, so we're down, 5% over last year, which is not unsurprising. But we had a pretty significant increase in mortgage rates, as you remember, basically last spring. Like, started, I think, sometime in March or even February, and we saw like very rapid rate increases. But at that time, last August, people were still holding on to rate holds. So if you go for a mortgage pre-approval, typically you have anywhere between 90 to 120 days to lock into that rate that you were provided during a pre-approval. So that skews the sales volume a little bit, but we're not seeing that this year, obviously, because rates have basically been high, and actually they did increase in June, certainly on the fixed side. So that certainly didn't help from a sales volume perspective and qualification perspective, because those are two obviously major factors when transacting in real estate. Okay, so new listings are up 16% relative to where we were last year. But actually, what's, I think, perhaps more interesting is what's happening month over month. So we actually, the new listings increased month over month from July 2023 to August 2023 by 10.3%. So that's a pretty significant number over the summer. Now, typically that does happen, right? So you look at, historically, over the last, call it 20 years, typically what happens is we start seeing prices decline, from June to August, and then, inventory started to rise, and then the fall market kicks in, and that's when we start seeing, some further absorption. But this year we saw a rise or an increase in new listings, but actually sales volume increased month over month, which is very unusual. Like, certainly for August anyways, you don't see that happen very often. So, I mean, like, the sales volume increased by 0.8%. So it's not like, amazing from a stat perspective, but typically when you see a rise of inventory by 10%, you're probably going to see sales volume decline anywhere between like 3 to 10% potentially, right? Depending on where, on the year and what's happening macroeconomically. So, but anyways, that I found that fascinating. However, and all that said, I'm recording this early September. Bank of Canada just announced that they're not increasing the overnight lending rate, so variable rate mortgages have stayed the same. They're meeting two further times this year, so we'll see. We'll see if we're going to see any further rate hikes. It's possible. I guess it really depends on where inflation is for Q3. And what's happening macroeconomically. Interestingly, the Canadian economy shrunk in Q2. That was announced a few weeks ago. Now, it was a slight contraction, but why is that relevant or important? It's because, technically speaking, when you have two consecutive quarters of negative growth or shrinking of the economy, is defined as a recession. So, anyone who's been sort of tuning in this channel, that's one of the things that we're really monitoring is are we in a recession? And I sort of hinted that back in June that we may be, and certainly that was the start of it. Now, again, what we don't know is this, like how long or whether or not we're going to see contraction again for Q3. It'll be interesting. Two, how long if we are in a contraction in Q3, how long will this recession last? Like, is this going to be 2, 3, 4 quarters, typically, or is it going to be a prolonged recession? We don't know. But how that's relevant is that will signal, if we have, several quarters of consecutive quarters of contraction, the Bank of Canada is going to see that the economy is shrinking. We need to increase stimulus, which, one of the ways to do that is through the overnight lending rate. And so could we see potentially rate cuts instead of rate hikes going into 2024? I don't expect any rate cuts this year on the variable side. Will that happen in Q1 of 2024? Hard to say, too early to say, but those are things that we're looking out for and see because obviously that's going to have a huge, huge impact in terms of mortgage qualification and demand on the buy side for real estate. Okay, so I went on a little bit of a tangent there, apologize, but we saw new listings up 16%, which is not surprising when we see new listings, active listings are going to increase by a proportional amount. So that's just showing that the absorption, roughly is in line and not too dissimilar to where we were from a year ago. Okay, so average price. Here's where it gets super interesting. So as we talked about, actually, I'm going to talk about that in a second. So average prices basically year over year was the same, like no change, right? So not surprising. That's sort of where I thought we'd be. And, as we've talked about in the show many times, we typically see price declines in the summer. And I don't have the stat in front of me, but I would say 18 out of the last 22 years, you typically see, or close to that amount, you're going to see average prices decline from June to August, right? And that's exactly what we saw this year, right? So, and I talked about that last month. So here's actually a great graph. So, if you look at it closely, if you can zoom in on your phones, your computer, you'll see that, typically this is how the market goes. And we had a nice run up in price in June and then sort of, May, and then started seeing that, slight decline in June. And we saw a pretty steep decline actually, month over month from June to August. So I think we were down 5.2% from June to July and down 3.2% from August. So July to August. So that's roughly 8.4%. That's a lot. That's a big price drop. But, is that something to worry about? I guess it's great if you're a buyer potentially, not so great for your seller, but actually, I don't read too much into that. And why is that? It's fairly typical. Like if you look at all the average prices from August to September or to August, end of August, as I mentioned, it's almost red. All of them are almost red. Yes, many of them aren't as profound as 8.4, but it's not uncommon to see prices drop 5-6% from summer, start of summer to end of summer. That's in a good or buoyant real estate market, which we're not in, right? This is not a buoyant real estate market. Certainly volume's down, average prices are flat. So all things considering, it's still pretty healthy, but really the key is, as I said earlier, is where mortgage rates are, because that's going to be the huge driver either way. If we see rate hikes, continued rate hikes, that's going to put a lot of pressure on real estate prices, and obviously buyer demand. So because qualification is tough already, imagine raising rates another 25 to 50 basis points. That's going to be something that we're going to be looking at for. So again, we don't know this. We're all speculation, but we're going to be watching this really, really closely. All right, so here's where we are for all the regions across the GTA. So, Toronto, basically the prices are essentially flat everywhere, which is not surprising. Like, yes, Toronto maybe is a slighter decline, and yes, condo prices are a little bit softer than the freehold prices right now. York region seems to be leading the pack right now, which is not surprising because it got hit pretty hard last year in 2022. So, anyways, like, take this for what it is, but prices are basically where they were a year ago. But what I'm really interested to see is like how the market's going to react in September. Now, I'm recording this early September, so it's still way, way, way too early to tell like what's going on. Yes, even though it's early September, I was involved in several bidding wars for freehold properties. So that's something that I've noticed. Like, it's anything that's on, I would say, in a high demand area that's at an attractive price point, relative to the market. So, like, if you're looking in an area and the entry level of that area is going to be certainly more attractive than the upper end of that particular neighborhood, right? So typically what I'd say, like, that entry tranche, which is like the bottom 25% in active areas of Toronto, is still very, very in demand. Again, it depends. Like, I'm not saying that everything is selling in a bidding war. It's certainly not. And maybe I was just in particular involved with a couple bidding wars that's a little bit out of the ordinary. And certainly I've not seen them as much. Like, you can see that on listings now. A lot of sellers are accepting offers anytime. They're not looking for multiple offers. And that's certainly going to be a shift I think we're going to see come September. Like, the percentage of properties that are going to be taking offers anytime is going to be increasing. And, actually, I kind of like that because it allows, buyers to negotiate on price, allows them to take a little bit longer to think on properties and not have to, go in unconditional and perhaps do some due diligence. So anyways, we're going to see what happens this fall. And certainly we're going to report it on this channel. We're going to talk about it in depth, but those are the things that I'm particularly interested to see what happens for September. I think next month's actually is going to be one of our most interesting videos. So make sure you watch that because that'll really be setting the stage for what happens not only this fall but early 2024. Well, anyways, thank you so much for tuning into this month's video. Hope you enjoyed it. We love the questions. Keep them coming. And yeah, don't be shy to reach out to us on our social channels and just feel free to reach out if you have any questions and how these stats in particular are affecting you as a buyer or seller. I'd be happy to talk to you that way. Anyways, thanks again, and we will see you next month. Bye for now.